Hi, my Bitcoin followers. Bitcoin is back. Year to date, the price of digital currency is up by more than 200% and people are taking notice. Bitcoin Google search volumes are up, brokers are advertising their crypto offerings again, scammers are coming back, and first-time buyers are knocking on the doors of exchanges. To help crypto newcomers avoid classic beginners' mistakes, we have compiled a list of the do's and don'ts of investing in Bitcoin. Without further ado, let's begin. Let's take a look at the do's of investing in Bitcoin. Educate yourself about crypto before you invest. Before you purchase any digital asset, conduct thorough research on what you intend to buy. As the old investing adage goes, don't invest in what you don't understand. It is essential to educate yourself about how the blockchain and cryptocurrencies work, as well as the differences between the most popular digital assets. That way, you will understand the current and potential future value of each coin and token you are considering buying. Only use reputable exchanges. There are multiple ways to acquire digital assets. Once you know which assets you want to buy and you want to use an online exchange, it is important to only transact on reputable, secure platforms. There are hundreds of Bitcoin and altcoin exchanges, but only a handful of them are regulated. The majority of exchanges do not provide much transparency as to how they operate, how well they are funded, or how they handle their cybersecurity. Dealing on small, overseas exchanges that operate under little regulatory oversight can lead to an unexpected loss of funds due to an operational error, an exchange hack, or an exit scam. Unfortunately, all these things have happened in the past, which makes a strong argument for only dealing on reputable trading platforms. However, even those might be hacked. Securely store your digital asset holdings. As soon as you have purchased Bitcoin and/or other digital assets, it is imperative to store your holdings in a secure personal wallet. There are a wide array of wallets to choose from, but hardware wallets such as Ledger, Trezor, KeepKey, and BitLocks are generally considered the most secure for long-term investors. Do your research. If you're planning to invest in cryptocurrencies directly, it is important to ensure that you've done your research and that you continue to do so even once you've started operating within the markets. Your first step before investing in any crypto technology should be to read the white paper released by that company. For Bitcoin, read the first project white paper to get a clearer idea of what Satoshi Nakamoto planned for the project. With this information, you'll be able to determine which investment is best for your business and what you're likely to face rather than going into the market metaphorically blind. Invest only as much as you can afford to lose. It is also important to note that when it comes to investing in digital assets like Bitcoin, you should never invest more than you can afford to lose. While Bitcoin is on the rise, and many experts believe we will see it surpass its previous highs sooner than later, the reality is that Bitcoin is a volatile asset that can easily lose 50% of its value in a short period of time. Hence, experts agree that it is best to only commit a small percentage of one's overall investment portfolio to digital assets if you want to invest in the asset class. If you're enjoying the video, then make sure to hit that like button and subscribe to the channel for more interesting videos about Bitcoin. Let's take a look at don'ts of investing in Bitcoin. Don't let the volatility spook you. Bitcoin and digital assets are volatile investments. The price of Bitcoin can easily go up or down 10% in a matter of days, if not hours. So it is important to keep your cool as a crypto investor. Remember, this is not the stock market. Crypto experiences much bigger intraday price swings, and that's okay. If the volatility is making you nervous, maybe you're better off not checking the value of your digital asset portfolio daily. Don't leave your funds on exchanges. Exchange hacks are, unfortunately, still a widespread occurrence in the crypto asset markets. Even one of the market leaders, Binance, has not been immune from cyber attacks. Hence, it is imperative to transfer your digital asset holdings off exchanges and into your personal wallets as soon as you have executed your trades. If an exchange is hacked and your funds are affected, it can take weeks to get your funds back. provided the exchange will pay for the security breach, or you will lose all your funds with little to no legal recourse to recuperate them. Don't listen to what mainstream media says about Bitcoin. Mainstream media has claimed that Bitcoin has died over 300 times. At the same time, mainstream media loves to report about Bitcoin when the price is skyrocketing as it drives views and clicks from interested investors. Generally speaking, you should be very cautious towards mainstream media when it comes to any sort of financial advice. The same also holds true for investment in Bitcoin and other cryptocurrencies. However, choose your crypto media sources very carefully. Also, as the space is known for unprofessional reporting, biases, and hidden paid articles. Don't fall for a scam. Unfortunately, with the rise in the price of Bitcoin, scammers are coming back into the market as well. There are a number of different crypto scams to look out for, but when it comes to investment scams, the simple rule is, if it looks too good to be true, it probably is. Generally holds true. Avoid investing in any type of investment plans or schemes as they will likely turn out to be nothing more than Ponzi schemes. Instead, buy and hold the assets you want to buy directly if you want exposure to Bitcoin. Don't let emotions drive your decisions. Once you're within the market, you need to remember that cryptocurrency is volatile and that emotionally charged decisions can often do more harm than good. Providing you've done your research and have belief in the projects that you're investing in, it's important that you trust your instincts and those beliefs. When negative news spreads about cryptocurrency, this is usually done with the intention of crashing the price and driving people away from the coin. When this happens, don't panic. Play the long game. In most cases, the coins will regain worth and you'll only lose out if you sell. Panic selling is becoming more and more common in the cryptocurrency community and can often make the crashes seem worse than they truly are. Patience is a much needed trait in crypto and one that could work out in your favor. Don't take part in pump and dump schemes or groups. Pump and dump groups are very common in the crypto markets as it is easy to manipulate the price of small cap coins and tokens that see very little trading volumes. It may seem enticing to join these groups or schemes, but aside from the fact that these operations are illegal, you will likely lose out as someone who tries to ride the pump before the dump happens. Don't try to buy the next Bitcoin. Finally, a very common mistake of new crypto investors is to try to find the next Bitcoin. There are a number of cryptocurrency projects that claim to be the next Bitcoin in an effectively fraudulent attempt to entice newcomers to buy. There's only one Bitcoin, and their altcoins is not it. So guys, let me know down in the comment section below. Did you learn something new in today's video? For more interesting content, give this video a thumbs up and don't forget to subscribe to the channel for more awesome and interesting videos related to Bitcoin. Have a nice day, and I will see you in the next video.